if you were to simplify this navigating the tanker market and the oil market, maybe it's easier to first quickly explain the supply side, because obviously that's easier if you look at the order books, and then take demand afterwards. Because maybe when people are listening, we talk a lot about what can happen and the news flow, but usually that goes in the demand bucket, right? I mean, the order book, etc. We don't need to use that much energy to figure that out, at least in a pretty confident way, right?
No. The supply side on the tanker side is pretty much done. It's done and dusted. There, transparency has also evolved over the years. People don't hide their order books to the same extent they did before, and also, during 2000s, we had an enormous amount of yards, so-called greenfields, popping up left, right, and center on the globe. It's obviously very difficult to maneuver and knowing how much is actually in order and so forth. That has changed because of post 2008, 2009, all these yards were closed down, and now you're back to kind of, for the tanker side, a big handful of yards that can actually build a modern tanker, and what they have on order is more or less transparent. It's worked out, and also their capacity to build is more or less known. So the order book you have a good hand on, and the order book right now is, we talk about these big cycles. The order book now is so if you rewind to when I entered the tanker market, which was in 2002, 2003, and I moved to Asia pretty quickly. At that time, the tanker market was about half the size it is now in deadweight tons. So the carrying capacity of the tanker market was about half the size it is now. But the order book was actually bigger than it is now. So now, kind of forward wind 20 years almost, or just about 20 years, the tanker market, the overall carrying capacity of the tanker market is double what it was in 2002, 2003, but the order book is in deadweight terms exactly the same. And this is really is almost scary, considering the fact that 20 years ago, we went through a cycle where single hulls were kind of more and more difficult to trade, and more charters and ports and terminals and whatnot demanded a double hull vessel. This came kind of, first it was probably started with Exxon Valdez accident, but then you had a big accident in Korea as well, where a ship basically broke. There was a hole in a ship, and the kind of this double hull thing came into play. So basically, during the 2000s, partly due to the single hull, double hull trend, to call it that, and secondly, due to the growth of Chinese demand, there was a vast amount of vessels being built. And as I mentioned, the order book in absolute deadweight terms is now lower than it was during those years. And all these vessels are coming up to 20 years of age. And I think I'll spend a little bit of time on this 20-year thing, because, I can say it until I'm blue in the face, but investors don't really get it, right? And then you have kind of Harbjörn with NAT will tell it, a tanker can trade till it's 25 to 30, blah, blah, blah. It can, but the charters don't want it. And this has to do with the simple fact that, for a charter, for an oil major, one of the things that he's most scared of is an oil spill. Whether if he has to pay, $100,000 more or $500,000 more on freight, that accounts to extremely little for the risk of having a massive spill. The cost to an oil major, say, to have like an Exxon Valdez spill, is enormous. Not, they're insured and all that stuff, but just kind of, you lose, you lose your company kind of reputation. And that goes for Equinor and Total and Shell and all of them. So, and these guys have really rigid vetting departments who are not charterers. And, there is a reason why, a vetting department guy, he's supposed to be an engineer. He's literally being an auditor, internal auditor, to make sure that the kits the guys rent in are of the best quality possible. And a tanker is not a rigid structure. It's a steel, but it bends. It has to bend, otherwise it will break during waves and so forth, going through rough seas. And when something built of steel is bent for 20 years, the probability for it breaking starts to increase exponentially. So this means that, if you have a ship that's more than 20 years old, you have a very limited amount of clients, and you can't really trade that ship very efficiently. So it means that, and this is also the reason why the average scrapping age in the tanker industry is just a year and a half north of 20 years. That's when the ships leave the industry. So now we're getting into both this generation of ships that were built early 2000s that are reaching this 20-year gap or threshold. And we are actually in the market where oil demand is expected to grow. It's actually expected to grow incrementally due to us coming out of a pandemic. And then you have this thing that the order book is actually lower than it was back in 2000s. And the market is much larger. One interesting thing to put that in context is that back in early 2000, the global kind of oil demand was hovering north of 85 million barrels per day, or around 85 million barrels per day. Now, by the end of the year, we're about to reach 102 million barrels per day. And the oil transported on water, which is about 40% of global oil demand, that has doubled in the same period. And the size of the market has doubled, but the order book is, if you compare it, it's half of what it should be in theory.